The following is a presentation of TFNN. Live at TFNN, the Money Masters. Now, your Money Masters, Tom O'Brien and Steve Rhodes.
Welcome, folks. Steve Rhodes, Tom O'Brien. Appreciate all you tigers and tigresses growling and prowling with us out here. Right now, we get the Dow up 13, Nasdaq's up 5, S&Ps are up 2. We get gold down 3, bonds are down 5 ticks, oil's down 33 cents. Oil's had beautiful ABC down. It just blew away that B point, has the juice behind it. We get King Dollar down 4 ticks right now at 80.04, and she wants to move topside. Euro's down 25 ticks at 129.61, and the yen is out there at 79.80. Can you spell ABC? ABC down.
That's what the D stands for.
I'll tell you. Oh, that's pretty cool. Yeah, right.
Until it's ABCDF.
Oh, yeah, that's right.
Now,
no, that's right.
Okay. We got it. That's okay right now.
That's right.
Right now, ABC down.
ABC. Now they're ABC down. So you can see from the market, folks, okay? Yeah, the market can't hold price. And what this is going to be all about is that, you know, we talked about it yesterday morning. There's no fear. There's still no fear.
There is no fear. That's right.
That's problematic, folks. So if you bulls out there, you better get scared quick, okay? You know, get your stop in if you want to bounce. I'm telling you, that's just the way it is. You know?
The fear is going to show up Friday or Monday.
And you know what? By Friday or Monday, you'll be, if that's, and I expect you're right. And
well, like you say, fast price destruction.
Right.
I mean, that's what will get the fear out there. When it really starts moving away, and then you've got these managers out there that are saying, "Hey, I can't let this slip away much longer."
Exactly. They just let 4% slip away in a week and a half.
Yeah.
That's big. That's big money when they're only dealing with 12 or 13.
Right. That's right. That's right.
That's a big number, folks. There's no two ways about that. When all's said and done, so.
What is interesting is, I'm paying attention to the Russell 2000.
Yes.
Because that actually, yesterday, had the biggest bounce.
It did.
And one of the things is, and what I'd like people to do is just to understand how the markets are correlated. If you just simply, you weren't paying attention to what was going on in the futures marketplace in the Russell 2000, you could have just simply pulled up the Russell 2000 index here, the daily chart on it. I'll pull it up in a moment.
Yes.
And what it did do yesterday was it gave you a nice little hammer candle.
Okay. Right.
But you got to realize, folks, that you need to be able to connect the dots and make sure that you've got confirmation of these things. Yet if you went over to the futures marketplace and you took a look at the daily chart on the Russell 2000, it doesn't exist out there.
Oh,
and so,
that's pretty cool.
Yeah. So, I'll blow this up. Here's the candle from yesterday.
Right.
It's not a hammer candle. It was telling you it was actually kind of a flip of the coin in the middle of the session day. Yeah, there was strength on it, but I went down to the, so I want people to really be able to correlate some things. Like folks will ask me questions about trading some of the currency ETFs.
Right.
And I'll say, look, it's okay to trade those, but if you're not paying attention to the euro-US dollar currency chart, if you're going to trade the FXE, just don't trade it.
Right.
Because you can't, because the people start taking a look, and we talk about gaps, getting filled, or we talk about ABCD patterns, but it's really the patterns inside the underlying instrument that you just have to take a look at.
Absolutely.
Otherwise, you're going to be using really bad information that you just can't correlate it.
Big time. Well, I got a call yesterday afternoon, and it's a real heads up, because what you're going to have to watch like a hawk, folks, is the Russell. And this is why. So check this out. We saw it came back yesterday, right?
Yes,
and I was watching,
absolutely.
Of course, what was I watching? Well, of course, I was watching the housing stocks, okay?
Yes.
And the housing stocks, folks, will not back off.
Yes.
Okay? So, check this out. And this is where just cycles
and even today, I just saw something, housing up today, 5.7%.
Right. Right.
They're not backing off either on the charts or physically.
Period. Period. Okay? So, when I was looking yesterday, I'm watching the IWM. Now, the market's getting smoked. The IWM wasn't getting smoked.
Yes.
And then the housing wasn't. I says, oh, baby. Okay, so check this out. If you remember, when I started the gold report, folks, that was 2001. And I'll put up the Russell here for you so you can see the correlation. And the correlation is intense here, because what you have, the Russell is the only indice, okay, that not only took,
got over its highs.
It not only took over its highs, it only took, I believe, 2 years after the Dow. Let's see. Let me put a monthly up here. When you see this, it's just amazing. Okay, so picture this. The Russell had a high like the rest of the market in 2000,
yes,
right?
Yes.
The Russell goes from 614 down to 334. So it almost gets cut in half, right? Well, guess what? The Russell took over that high in November of 04.
Yeah.
Now, that was all about the commodities inside the Russell 2000.
Okay.
That's what that was about. Okay? So, because you got to remember, if you had the gold report, some of these stocks were $3 or $4 and they're 50 and 60 now.
Yes.
Okay? That was the acceleration up.
Yes.
Okay? Now, yesterday what you had, it's the home builders that are in there. It's the some of the lumber yards that are in there. There's a lot of small caps that are in there. So you're going to have to really watch that like a hawk. Now, what you do also have in there is you still have a lot of the material stocks. So when they get hit, they're going to come back. But, it wasn't that I said, oh, my God, look at this.
Yeah.
So,
so that's another great correlation.
It comes back to that. It comes back to you really want to understand what's inside these indices, for sure.
Yeah, and it's like if you're trading the SPYs, you need to know what's going on inside really just three sectors. You could take a look at technology, energy, and the financials.
Exactly.
That makes up, I think, probably 60% or more of what's going on. And then it boils down to pretty much, folks, like 15 companies.
Yeah.
15 to 20 companies make up the weighting of that whole set out there.
You got it.
So it makes it easy for you. You just have to do some of the work.
It does. It makes when you break it down, it makes it a lot more focused, so that you just don't basically turn around and say, I'm going to do this because I think this is high or low. And, it's pretty cool, man, because, the housing market, folks, okay, and if you have an interest in housing, we opened a fund. It's the Tiger Real Estate Opportunity Fund. You can go over to our website at TFNN. You'll see there's a white paper under there. You can go to our website, check out what we're doing. If you're an accredited investor, basically just double opt in. I'm going to be doing a workshop in Boston, and I'm going to be in Boston November 1st. I'm going to be it's a dinner presentation, so you'll get an email or just give us an email. I'm going to be in Orlando the 7th. I'm going to be in San Jose, California the 15th. And I'm going to be in Denver, Colorado on the 17th. And I'm going to be, the 16th, I'm going to be in San Francisco at the Gold Show.
That's cool.
That's going to be a fun weekend.
Yeah.
See, you know what's really cool, folks? I'll tell you, I like ganging things up, because then this is just like going over the B point. What ends up happening when I do my schedule, I like to look at it, I says, okay, hold it, let's lay it out here. And particularly, it's going to the most fun one is actually going to be when I'm going to go Thursday night, do the presentation.
San Jose.
At San Jose.
Yeah.
Then all day Friday, I'm going to be meeting with the gold companies. I get on the plane Friday night. I'm going to do the presentation Saturday morning in Denver.
Okay, cool.
And then I'm going to be home Saturday night.
Oh, you should see if there's a football game.
No,
there's a football game in Denver.
But
go to the Mile High Stadium.
I know. Maybe I will. You know what happens, though? I always want to get home. I do.
Yeah,
but
I know. Plus our schedules and everything.
Because even when I'm up in Boston, I just fly in. That's crazy. Nah, it's not crazy. If you lived what we live down here, folks, it's not crazy.
That's true.
You know what I mean? It really isn't.
Well, so we got, Warren Buffett, I think, was on CNBC for a couple hours this morning.
Right.
And, I didn't catch much of it, but what I did catch was, again, him in essence saying, look, it's housing, folks.
Right.
It's all about housing.
Right.
He said last time he was on, he was saying, if it were me and I had my money out there, I'd be looking at buying rentals out there.
Get a 30-year. I heard the quote. The 30-year loan. It's not going to be like this in 5 years, and it's not.
He said it's not going to be like this in
forever.
2 years.
No.
Now's the time to strike.
It is, and depending where you are, folks, at certain places there are opportunities. Where we are. I get this thing locked up, let me tell you.
Yeah.
I can't sleep some nights because I can't. It's wicked. It's wicked. We got one on, what day is it? Monday morning.
Yeah, you did.
And oh, man, I was panting. Do you know what I mean? Because it was like, man, I had to get my hands on this. Because you're competing. That's the bottom line. So you get,
Yeah.
You know, but
Well,
it's so wild.
It's also about buying right. It's not just about just simply blindfold, just go out there and buy.
Right.
You know, so they're, yeah.
Oh, yeah, no, it's important. And you know it's really wild now. This is what's wild. You talk about made for this. When I did this before, when I was a kid, I did this in Boston, okay? But then you were face to face.
Yes.
What's going on? This is electronic.
Yeah.
And let me tell you something. Just the day trading skills help dramatically.
Oh, that's cool.
It's really weird,
that's
but
great.
it really does,
yeah.
because what ends up happening, I visualize, I know the other side, you know what I mean?
Right.
So it's one of those deals that, you just want to get people frustrated, you know what I mean? It's like, and then, so what you also do, now this is where it's important, it's also to establish a good track record, meaning just in the aspect of it, because what happens is that we're building cases on everyone else that we're competing with.
Right,
we can get that
sure,
information.
for sure.
That's what's really cool. So
Yeah.
that's information that we have.
Yeah.
Okay? So, you're kind of modeling I'm sure they're modeling me, too. Do you know what I mean? There's no doubt, man.
No one can model you. Everybody's been trying to model you. We're all trying to model you.
Well, I'll tell you, you can do it. It's just that the shifts are pretty quick. Let's take a look at some of these high-volume stocks, more than likely in a low-volume market. We have Bank of America is up 8. Facebook got some action. Rick from British Columbia, he's not paying his tax anymore, but he'll be able to pay him now. He owns that. He bought it right before the close last night.
Oh, did he?
He called.
Yeah. Good for him. Okay,
it's up
good.
20%, folks.
Sell.
It's up $4.
Sell, Mortimer.
Yeah.
Sell.
You get Ford up.
On Facebook, though, that's what I said on the early show this morning. Was and I didn't have the number. I'm going to ask David for it. But how many shares are coming on the marketplace here?
Oh, yeah.
He
knew they were coming on. But no, it is huge. There's no doubt. There's no doubt. Now, it would be good with Facebook. It made it to 17. The ABC down is to 13, but it made it to 17. Yeah, what you have here, folks, that gap will get filled. If it, it's really wild. If it ever gapped away again, that'd be quite an island bottom.
Yeah. Oh my goodness, wouldn't it?
Yeah, it would. It really would.
That would be one for the textbooks.
That would be one for the textbooks. There's no doubt about it. Let me pull this back a bit. Yeah, that'd be a classic, man. Look at that. That would be a classic. So we'll see.
It's too many shares coming on the market. I think it's just huge, and you're coming into the holiday season, and it's
they're going to need the money.
And they in their minds, their wealth was cut in half because of when it opened to where it is.
Oh, totally.
And they're going to say, hey, this is still a good deal.
Right. Big time. Hey, listen, when you go from $20 to $24, it's better than a good deal, right?
Well, that's true.
You know what I mean?
That's right. So they got it on both sides. They're like, hey, it was cut in half, and now I just got this punch up.
Yeah. Yeah, and so and time heals. Time heals all, right?
Yeah.
Do you know what I mean?
Yes.
Wow. Steve Rhodes, Tom O'Brien, appreciate all you tigers and tigresses growling and prowling with us out here. Right now, we get the Dow up 24, Nasdaq's up 4, S&Ps are up 2. You stay right there, folks. We're coming right back.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks. Steve Rhodes, Tom O'Brien. Appreciate all you tigers and tigresses growling and prowling with us out here. Right now, we get the Dow up 26, Nasdaq's up 3, S&Ps are flat. Well, you get them up to $2.
So lumber liquidators, they happen to be popping here this morning. I haven't looked at that stock chart. It's LL is the ticker symbol,
yep.
Up 16%. I don't know if there's something behind that move.
Oh, listen,
news-wise
there
or
is.
anything, but,
I'm putting all hardwood floors in.
Okay.
Hey, you want to? Yeah, I'll tell you something, folks.
Okay, just their sales.
So check this out. This is really cool. No matter where you are in the country, okay, this is something that you should understand anyway. Okay, yeah, this is insane. When you're looking at places, right? Now, I learned this. I built quite a few places in Boston. And what I used to always do, and this will blow your mind, folks, okay, that do you know that you can put beautiful hardwood floors in? I'm not talking about veneer. I'm talking real hardwood floors. And for almost the same price, you can put rugs in. And that blows people's minds because people can't figure out, like, what do you mean?
Yeah.
And the difference in the cost structure and someone walking in the place, folks, is insane.
Right.
Okay?
Right.
And what I used to do in Boston all the time is that I'd actually also, people were always scared of them in kitchens. I'd put them through the whole kitchen. So you'd walk in, and in Boston, would end up, I do an open plan more than anything.
Sure.
Do you know what I mean?
Sure. Well,
and you get the kitchen, the living room, and looking right out. But it cracks me up, man, because what does happen is that they're so much easier to clean. And there's no bugs get in them. I mean, there's a million, different things.
Sure.
But look,
hard for fleas to get into the hardwood. Yeah.
But yeah, look at lumber liquidators, man. I mean, they're making money. Let's see what they have to say. It's crazy.
Here's a stock that was at $13 and change or what have you back in October, 2011. That thing has made a move. $58, not bad.
No, it's huge. Let's see. They thought they were going to make $1.30 to $1.42. They made $1.53. Or they're going to make $1.53 to $1.59. Their gross margin. Oh, look at the gross margin went up. Gross margin went from 35% to 38%. That's sweet. Revenue. The estimate was $778 million. They're going to do $791 to $800 million. So
now this, how far back does your chart go on this?
It's LL again.
Yeah,
right?
LL. Just kind of curious what this thing will look like.
Oh yeah, for sure. No, ooh, look at that. It's even better.
So this thing, that's as far back. So this is that's interesting.
Yeah, this went public in 08.
Yeah. Okay.
And look at this. Oh man, if you want to look at this, this is I'll tell you, folks. We know the methodology behind it. We know how the numbers work, whether it's the Gartley pattern, the ABC structures. But it's so wild that this took out a B point with volume on the monthly, and it took it out. This is a huge ABC up.
Which I love going and finding. I love finding equities that are taking out their B point on a monthly chart.
Right. Oh, it's
volume.
huge.
Look, we have one remaining. When I have my bullhorns on, I think we have about 8 or 9 individual stocks, not any of the indexes, and we've got one that still remains. And it was nothing more than going back, taking a look at finding monthly patterns that had confirmed.
Okay.
And we were playing a momentum move.
Totally.
And, even with the market coming down 200 points yesterday, we had stock couldn't even move. They couldn't budget.
No, totally.
And it's up at its highs.
Isn't that sweet?
And they couldn't budget, because I've been a little cautious about it.
Right.
I'm not going to give you the name, but because that'll really put the
no.
But it is cool to watch those stocks on a day like yesterday. It is great to just go filter through and find what stocks couldn't be budged down.
And no doubt. Because those are the ones you're going to want to be buying.
Because when the market turns and you've got momentum moves,
no doubt.
They want to be paying attention to that.
Big time. We got Ilka. Ilka's back from the Bahamas. Ilka, what's going on?
Hi, Tom. Hi, Steve. No, not Bahamas. Bermuda.
Bermuda, sorry. I'm sure you had a blast.
Fish, butter, and bananas is my new meal.
What is it?
Fried fish.
Yes.
Well, it's satay, really. Satay in butter and bananas.
Oh, sweet.
Okay. That sounds good.
Nice.
That is highly recommended. It's so delicious. And you guys have probably good fish there, too.
Oh, we have great fish there. I'll try it.
Try it because it's so simple, and it just gives you a lot of, good butter.
Yeah.
And the fish with it, and some...
Well, we get that Kerry Irish butter.
It's great. It is really good. Yeah.
Yes, we do. I do too. I actually use that. That's exactly right. That's the organic one. I love that one.
Yeah, totally.
So I'm calling to claim my loss.
Well, listen, it's all right. I bought all the lobster boats. This time, I got it made.
Well, I'm still ahead a little bit. Yeah, you have like 2 to 1 or something. So, but that was a nice move.
No doubt. You stay right there. We got Ilka from Boston. She's back from the Bermuda with the fish.
Healthy.
Bananas. Yeah, that's
the fish part's healthy. I don't know about the butter, but the fish part.
The butter that she's talking about is really healthy. That's good fat. Steve Rhodes, Tom O'Brien. You stay right there, folks. We're coming right back.
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. TFNN and Great Panther Silver have teamed up for another exciting silver giveaway. The Great Panther Silver Halloween giveaway will be taking place at the end of October, and for 3 full days, we'll be giving away silver coins and bars every hour from 9 a.m. till 6 p.m. to one lucky winner randomly chosen. There's no purchase necessary. For more information and to fill out your registration form today, simply visit the front page of TFNN.com where you'll find all the details. October 29th, 30th, and 31st, we'll choose one lucky winner that will receive a silver coin or bar courtesy of Great Panther Silver. Winners will be announced live on the air each hour for 3 full days. Don't miss out on this great opportunity to win free silver from TFNN and Great Panther Silver. Register today by visiting the front page of TFNN.com, and for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com or check them out on the NYSE Amex, symbol GPL, or on the Toronto Stock Exchange, symbol GPR. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Welcome back, folks. Steve Rhodes, Tom O'Brien. We got Ilka from Boston. And what are we going to look at today, Ilka?
ADY.
A?
D as Don. Y.
ADY.
It's a Chinese, yeah.
Oh, okay, cool. Okay, so let's see. Producer of infant...
I think they're dairy products of some sort.
Oh, yeah.
But on the monthly, on this, do you think that tested in a acceptable way? I'm in it, but I've been in it for a little while. But I just wanted to see.
I see. So it's ADY, folks. This is infant formula in China, and I think this is the one that, yeah, it looks to me like it's the one that did get smoked, right, with that bad formula. I don't, I remember that scandal, but. Stock.
While back, yeah.
What probably happened is that they probably all got hurt because of one. I don't know if this is the one. Yeah, I like that setup.
You do?
Yeah. Okay. What does happen is this: the only folks we're looking at ADY now. Something that now this is wicked subtle, but I always get worried when you have the expansion of price, you have the volume, right? But when it doesn't take out a swing point, I've seen some big problems, So don't, get married to this thing.
No. I'm married to, I'm married to one person, and I'm good with that.
That's a beautiful thing.
And guess what? I took a gamble on that Facebook as well, so I guess it wasn't investing at all. It was just a winning gamble thing. Very small position, but it paid off last night, so that's good.
That's great.
All right. Listen, guys, thank you.
Okay.
And so it's 2-1, Tom, right?
I guess it's 2-1, but the bottom line is that you get a lobster and I get all the boats.
Okay.
It's all about how much money comes to the bottom line, Ilka. And the bottom line...
You're totally right. You're awesome.
Yeah.
Very good, you guys. You guys doing a wonderful job.
Yeah.
Thank you.
Have a great one. Have a safe one.
Bye-bye.
The market right now, folks, Apple's having a hard time holding it up. So what you have here is... It's tomorrow, right? Is it tomorrow after the close? Let's see. So, yeah, it's tomorrow after the close. Today's
24th. Okay.
Okay, so it's after the close tomorrow. Now, Steve and I, we were just talking even at the break, and let me tell you something, folks. It's serious business right now where Apple is, because they just came out with all their products yesterday.
Yes.
And what you have there is that you have a situation that it's like, okay, it's an outstanding company. There's no doubt about that.
For sure.
Best products in the world.
Absolutely.
All of that above, okay? I heard an analyst yesterday, and this was, I thought, something that they brought up was really great. And what it was is that Apple, because they buy the insides of those, okay, they buy the best products.
Yes,
okay?
yes.
And what has happened, folks, it's not, when everyone was cloning the Microsoft machines,
okay,
what happened is that you could buy the same things, okay? And you could price them out. Well, you know that more than anyone.
Absolutely,
okay?
That's right. That's right.
And what this analyst was talking about is that you can't do that with Apple because Apple created them.
Yeah.
They have the supply line.
Control. Yeah.
And so what ends up happening is that if you and me wanted to go get and build something as nice as Apple, right?
Yes.
It would cost us up more than Apple. So they have that advantage, but that advantage I don't think is enough because there's so many other devices out there. Do you know what I'm saying?
Yeah. So I see where you're going. For me, it's you're going in a price point in a $300-400 range or what have you, and to a certain extent, people are getting kind of in the mindset that these are disposable products.
Yeah.
Right. Because when you take a look at the phone, when you take a look at even Apple is discontinuing an iPad that was out here for the last 6, 8, 9 months.
Okay.
Replacing it with a new one as well yesterday.
Yeah.
I don't know the details behind it, but when you start to get into disposable type products, the mindset, people are just simply going to, they might more make a financial decision,
right?
As well as utilization,
right?
I think that keyboard that is on the Microsoft version of of their pad, is pretty cool.
Oh,
and I will see what it actually, but to be able to take a pad and then do a flip down with the in essence a cover, and you just have a keyboard that you can type away, just simply becomes multi-purposed.
No, I'm with you. I have a hard time with my iPad.
And really be pecking away to do anything of any substantial nature. But
well, what happens is that if I'm sitting there watching a football game on Sunday, I have a harder time sitting on the couch going like this than
I just sit there with my laptop on my lap. I got this little device to just put it on, and so the pads themselves are cool for just some small stuff,
right?
To be efficient
for viewing, right.
So if somebody was going to try to make the same quality product, no, I get it, they couldn't do it. But
it doesn't matter. No, I know. You're right. That's
Apple. In fact, in order for Apple to truly, really grow, they need these products to be disposable. They need people to want to upgrade in order to continue.
Right.
Not that, but the, cell phones are simply, there's still so much more growth when you take a look around the world.
Right.
But, when you start taking a look where Apple products are and so forth, it's really the existing customers, that
big time.
that are.
And what's going to be the next Apple? That's
right.
That's the number, right? That's what you just said to me. That's what you just said to me at the break. Because the fact is, there'll be another one. And, what will it be and what will it do? You know what I mean?
I think that probably the next Apple's, stock-wise, chart-wise, or what have you, it still ends up being the housing stocks. That probably, like we were talking, really when the show opened up, and we were going back, taking a look at correlations, you taking a look at what's going on inside the Russell 2000.
Right.
You know, what's making up a significant number of components that are inside there. What we know is going on inside the real estate marketplace with regard to these housing stocks not pulling back.
No doubt. And that's going to, folks, the bottom line, it's going to put cash into communities. It's going to put velocity of cash flow through communities. And that's still going to take a while because people are still scared. And you can't blame them. But it's going to happen, you know. So purchase of new homes rose in September, the highest level in 2 years. Sales climbed 5.7% to 389,000 annual, most since April of 2010.
You know, that's really powerful information because what they're also talking about there is they're talking about new homes. Forget about all of the old inventory that still has to be worked through.
Yep. Demand for new houses were up 27.1% from a year ago. I know. See, it's 3 out of the 4 regions were up. Jump in housing in September was the latest month supply. Well, you know what is also happening is that we have the stats. And you can get these stats, folks. By the way, you can just Google. You can do this anywhere in the country, by the way. What ends up happening is that the real estate multiple listing services, they just give them to their agents first. But because of the internet, which is beautiful, so wherever you are, just Google it, and what you'll see there's some really great data, and the data that comes out every month will have what's on the market. They break it down into categories. Then they break down the price categories. Then they break down how many houses are on the market. And what you're going to see, depending where you live, where we live, you see the houses, the sales go up, and the listings go down. And I mean dramatically. So that's leverage beyond belief. And there's no doubt what you do have out there when they talk about shadow inventory. The shadow inventory is out there. There are so many people just waiting to sell at the right price. And the sad part is, if you're one of them, I'm telling you, don't sell. Just have patience. You gotta picture something, folks. Where can you make even 5% on a leveraged product? You already went through the worst of it. Okay,
that's right.
You know, so it's like hang tough. You know, you'll be happy in 2 or 3 years. And what the way that you have to do that, this is what I've found. You have to absolutely put it on paper. If you put it on paper and say, okay, I've made it through. I want to get 100, 200, 300 grand, whatever that is. Yeah. You have to take that number. And if depending on what kind of bullhorns you have, you can just multiply that number by 1%, 2%, 3%, 4%, whatever you want. Take the smallest, most conservative number. And when you look at it, you say, hold it.
Yeah.
Where can I make that kind of money?
That's right.
Meaning on the stuff that you're just holding. You're doing nothing.
That's right. No, there's no question about it. No, there's no question about it.
You know, go from there. And just like with the gold, I'll tell you when I'm selling. But guess what? We're just buying.
You know, you take a look at that home rise, 5.7%.
Yes.
And, you know, supporting that, Sherwin-Williams stock, I think it's at all-time highs. You know, paint company, it's up there. You know, so I think you got to start also look for all the different staples.
Yeah, you do.
You know, the carpet companies, the wood, the lumber. You know, all of these different things, components that are going to make up those stocks, because that's also another way to be able to, from a stock standpoint, be able to get in on that.
Yeah, and you know what? Here's a sleeper.
Okay,
this is going to be interesting.
So
this is Ainsworth Lumber now. This is a Canadian stock. Now check this out, folks.
Okay,
this is the largest particle board maker in the world.
Really? Okay.
Yeah. Now these guys. Let me just see this for a second, because.
Hey, they're up in British Columbia.
Yeah, they are.
Okay.
We can have Rick go visit them.
Yeah, I think so.
And I could get them in the factory, too. Let me just see something for a second. We've put this back 15. Look at this. So this went from 120. Wow. Yeah, it went from $120, folks, down to 20 cents. That's 80 cents. Now, you can see, this is a classic, isn't it? You can see the first sign of strength. It came in, and the first sign of strength came in, folks, in 2010. Goes sideways. You get another one. It's going to take a long time, but get this on your horizon. If you're a fundamentalist, you can wrap your head around it. I happen to know what they do and what they have, and this is really it's a lumber play, but it's really a technology play. They have this lumber now. Check this out. That is actually a particle board lumber, right? That is as strong as steel. And what's happening, see what happens in Florida, folks, the building codes in Florida because of hurricanes are more intense than in many parts of the country. And they either got approved or they're trying to get approved right now for just about hurricane buildings.
Okay, yeah.
But it has to do with, this is what's so crazy, it has to do with junk wood. So they take all the scraps.
Pretty cool, yeah.
I know,
yeah.
Isn't that amazing? And technology-wise, they put it together, and somehow their engineers have figured out how to put it together to, the angles or whatever. But it's a kind of a neat story. If you're going to buy it, check it out. But technically, on a pullback, that thing is set up, Isn't that wild,
We got to get Rick to go over there and check that out.
Yeah, totally.
ANS.
Yeah.
That's cool.
Yeah, totally.
Well, that's what I think. I think it is, all these little different staple companies that will. I mean, I think that's next Apple somewhere. in there,
no, it is.
Where you're going to see some big opportunity moves.
Right. Well, because we're all geniuses in a bull market.
Yeah, absolutely.
That's when you think you're a genius, folks. That's all that happens. If you're in the bull trend, you're a genius, man. Yeah. It's really wild. Just remember that, and remember that none of us are King Kong, okay? Because then you get the King Kong syndrome, and then you're in trouble. Because then King Kong gets slayed by the.
That's right.
Gets slayed by someone.
Dracula.
The woman, right?
Who the Japanese?
Yeah.
Brain fart. Oh well.
Yeah. Oh well. Let's see. This is kind of interesting. Joe's saying that Yahoo's the next Apple. This could get interesting. He might have a point here. I don't know if it's the next Apple, but I'll tell you. It had
a nice move yesterday for sure. It's got volume behind it. It's
going to need a lot more juice, but you know what? I believe they probably still get a lot of people over there if they can figure out, what to do, right? How to basically take care of the customers, and that's all she was talking about, right?
That is 100%. Yeah, exactly. Now, it couldn't take out its highs, right? So let me see where this thing was going right into. Try to pull this back here. It's really right into the last time when this thing gapped down. Technically speaking,
right?
What it needs to get above, from what I look at it, it needs to get above the close of May 12, 2011, that low of 16.93.
Right.
And that's really where it had gapped down, and so. It
has a huge amount of work. Could you imagine owning Yahoo and Google? Microsoft went after it. They said no, and it goes from $45 down to $8. My God.
Yeah.
That's so over the top. It's a mind blower, man. It really is. Absolutely a mind blower. So inside the NDX, folks, let's go take a look at that because you have. I see what it is. Netflix. Altera. Altera is a sleeper. Altera is down. Altera is a large weighting inside the NDX 100. See, because Gilead Sciences should be bringing the NDX up dramatically. That's up $4, and this is a large weighting also. But what's killing it is Altera. Altera is down $2, but that's offsetting Gilead. There's a big ABC down. So this is more trouble for the chip makers. Yeah, big time. So you had the last time we came down to this level, you got down there. Oh, look where it is. Okay, so this August 11th, that's already down there.
Yeah.
DuPont was going down there yesterday. That August 11th, folks, let me tell you something. Watch where your stocks are on August 11th, August of 2011. Because that's where this market wants to go, and it can hold those levels. The
Right.
S&P,
well, because that's where that was. So we've had two big tick and trend bottom.
Yes.
That were put in. One was in August, I think was August 9th or 10th.
And then May
the other was at October 4th.
Oh, that's right. Yes,
right.
exactly.
Those two were the big ones I think that we have out there.
That's right. Yeah. That's right. And it's May 2010 that was holding the August and October one up.
That's right.
And this time, you very well could have the August one hold us up coming back. Steve Rhodes, Tom O'Brien. You stay right there, folks. We're coming right back. We have the Dow up 46, NASDAQ up 6, S&Ps are up 4.5. We're going to be right back.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look to Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success, and it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Steve Rhodes, Tom O'Brien. We have the Dow up 38 right now. Nasdaq's up 2. S&Ps are up 3.5. And Apple just can't hold it. When Apple is not holding it, folks, of course, you know the Nasdaq is not going to hold it. So, you know, the Apple game is a big one, and right now I think it's a very dangerous one because, you know, if we look at this for the last 3 days, man, oh man, I mean, the volatility's there, but they've taken people each and every time on this bounce.
Oh, they did. Yeah, you had a $15 or so.
Yeah. This morning, okay, so this morning we're up $10.
Yes.
And guess what? Now we're up $1.50.
Yeah.
And what's hanging out here, you know, folks, is 2 days ago, on the 19th, you're going to see, if you're watching Tiger TV, $609.62. That's a high volume load that's going to get tested. We'll see if we get the volume or not. But, that baby wants to get tested.
Well, it should be fun doing your show. You're doing your show tomorrow night.
Yes.
Because they come out with earnings usually right at 4:30.
Yes.
I think, right? So, should be some volatility.
Oh, totally.
So the Friday morning show will be fun, too.
Yeah, totally. Well, maybe you have to do the show with me tomorrow night. We'll be growling and prowling out here.
I love it.
Yeah, let's do that. We got to do that. That'll be fun, man.
All right.
Because the bottom line, folks, is that this Apple deal is going to no doubt move the Nasdaq in a big way. If it can move topside, guess what? The Nasdaq's going topside. Right now the evidence is pointing to downtown. Because what you have on a weekly here, this is what's really problematic too. Because we did so much volume Monday, Tuesday, and Wednesday, we've already done all this. Apple has to do 20 million shares between today and tomorrow, and it's done more volume than the last swing low out here at 580.
Okay.
That's problematic.
Yeah.
That's it's like, so you're pounding on that swing low with volume right now.
Well, just take a look at. We've got the time. Take a look at IBM and Google. See, those are two equities that got pounced on.
They get toasted.
See what they're doing.
They're done.
IBM's
done.
Moving,
went from 210. We're at 191, and that baby. Let's see if we put this on a weekly. I put this a couple years. Yeah, I mean that's IBM has volume off the highs, so IBM,
which is really interesting.
Yeah, that's problematic. That means larger correction than normal, folks. And you can see.
And so really, back in August, it also had some volume off of the highs.
It did. And the second one, Google.
Yeah,
Google. Let's see. Oh man, geez, Google's got problems. Google's already so Google's back inside the range that it broke out of, and that sets up that it's not the end of the world, but we can set up a 430 Google.
Be a heck of a trading range.
Oh man, let me tell you, the first number is going to be 615. And you're at 679 right now, and so the benchmark on that, folks, is see all these benchmarks. August 11 again.
Okay.
August 2011.
There you go. Okay.
August 2011 can stop Google. And if that's what happens, folks,
up at the highs,
be all over it. That's going to need some real juice in order to basically break down that 615 area. And if you get it, well, then you get it. Because see on both sides though, this is pretty cool. See on the other side too, when we came down in 2008, we came down to 157 million, and then you're dealing with 73 million. Interesting. No, you're dealing with 106 million. It's going to need a lot more volume on the way down. That's what it comes down to. Well, this month so far I get 64 million. Yeah, it's not going to have. Well,
it shouldn't have.
It's not there yet either.
Yeah, because all the big energy.
Right. It's So it's going to have to build some cars in order to get into that area. Don't forget, folks, you stay right there because coming up next, Newton, Massachusetts, we got Basil Chapman, Darryl Martin, 1 to 2, David White, 2 to 3, Ken Shreve out in California, and then back here, 4 to 6. Have a great one, folks. Have a safe one.
Take care, folks. See you tomorrow.